however, I have the honor to give the virtual floor to Mr. Gavin Date, who is the CEO at Amber Infrastructure Limited, the exclusive investment advisor to the 3Cs investment fund. Mr. Date will explain the processes, how potential projects are selected and evaluated, how investment decisions are made, not politically, and how potential investees should approach the fund. Virtual Mr. Tate, please, the floor is yours.
Thank you very much. Good afternoon. Thank you very much for the Estonian government for hosting today's session, and my apologies for not being able to attend in person, but I've greatly enjoyed listening to the earlier discussions. As just was mentioned then, my name is Gavin Tate. I'm the CEO of Amber Infrastructure, and we've been working on the fund as investment advisor for just over a year now. So if we could put up the first slide, please. Thank you. So just a couple of words on who Amber is before we talk about the fund. We've got about 140 infrastructure investment professionals in 11 offices around the world. We manage 7 infrastructure funds with a track record dating back prior to 2006, when we launched what is today a €3 billion plus global fund listed on the London Stock Exchange. In addition to that first fund, we manage a number of specialised funds focused in sectors including energy, efficiency and digital. We've originated and managed over 150 investments over our long history, and a third of those have been greenfield opportunities, which is a specialism of Amber. If we now focus a little bit more onto the fund rather than Amber, the 3Cs investment fund is domiciled in Luxembourg. The fund terms will be familiar to those pension funds and life companies that typically invest in infrastructure across the world. The fund has been designed to appeal to all investors. All decisions taken by the fund are naturally driven by the commercial terms, which include achieving a target level of return of 12 to 15% over the 15-year life of the fund. We're targeting opportunities in the digital, transport and energy sectors, particularly in assets that are either greenfield in nature or require significant capex in order to achieve their growth ambitions. The fund size is just under €1 billion, and as Teach just mentioned then, we've got a target size of €3 to 5 billion and also a 5-year window in which to deploy that money. It's also worth stating that Amber is investing up to €10 million in the fund as well, which will be deployed side by side with private sector investors. And that is obviously a significant demonstration of our own confidence in the fund and what it is about. It is also worth saying that there are significant co-investment opportunities available for investors, and that's an interesting element of all because it effectively increases the firepower of the fund beyond its target size. We estimate that actually if we do achieve that €3 to 5 billion target size, it may actually result in us investing up to 25 to 30 billion euros in infrastructure once those co-investments and the debt that we also will put into our acquisitions are taken into account. Over the last year, we've built up a significant team and now have team members present in Vienna, Prague and Warsaw, and that team is growing all the time with another 2 senior hires due to join in the next couple of months. And despite the travel restrictions imposed by COVID, we've been very active in the region over the last year. In fact, I know 3 of my colleagues have just flown out of Tallinn yesterday, and one of them is not expected back in the UK where he's based for the next 2 to 3 months because he's travelling around the region and looking for opportunities. Zoom and other platforms, as we know, can only take you so far. It's those final face-to-face discussions that can never be beaten, especially if you're trying to close an actual deal. It's also worth stating that beyond that regional team, we also have a full Amber resource of over 140 individuals available for the fund. And the faces that you see on that page on the presentation are those within Amber who are currently purely working on the origination function. It doesn't feature those who are providing asset management services or finance services to the fund. So all in all, it is a huge operation that we're undertaking. It's also worth saying that on the right-hand side of the slide are the 5 members of the investment committee of the fund. They're comprised of 2 people from Amber, 1 from Fuchs, who is the Luxembourg-based manager of the fund, and 2 independents who were selected by Amber. And one of the early questions from potential investors is whether the fund and its investment decisions can be politically influenced. And we can reassure them that the investment process is completely independent from the countries themselves. Now, sourcing of the opportunities comes through a number of different routes. The countries themselves prepared what is described as a priority project list, and we're engaging with each of them to determine whether they're able to be invested by the private sector in their current form, and if they're not, to provide advice as to how this might be achieved. The fund is only able to invest in assets once they're all through their development phase and ready for construction. So as well as meeting the fund's investment criteria, we do need the projects to have their necessary permits and approvals. None of these priority projects are at this stage yet, but we very much hope they will be candidates for possible investment soon, and we'll be doing all we can to help them get to that stage. We also invest in opportunities that we source through the wider market. And as the fund has established itself over the last year, there are a lot of inquiries from incoming companies to us as well, seeking our assistance to help them expand across the region. You can see from this page that we have reviewed 126 opportunities across the region to date, broadly spread across the 3 sectors of transport, digital, and energy. These are funneled down through the various reviews. Do they meet the objectives of the fund, which includes demonstrating cross-border benefits? Do they meet the commercial requirements of the fund? And finally, and almost always the most challenging, can we reach acceptable financial terms to invest in the companies, assuming they have passed all of those previous points? This exercise is hugely time intensive, and that's why we have such a big team involved. The fund has now made its first investments, and I can recall when I spoke at the Estonian summit back in October, we were frustratingly just a couple of days away from being able to announce our first investment. So slightly delayed, but that first investment was made, and that is Cargo Unit. It's a rolling stock company that currently has 175 locomotives and significant ambitions to expand across the region. The finance provided by the fund is intended to assist with those growth ambitions. Last month, we closed €130 million financing for the company to make the capital structure more efficient and assist the expansion of the fleet into new geographies across the region. And the reason for picking Cargo Unit as a very good candidate for the fund, well, there's obviously a huge drive across the EU at the moment to improve the rail network and transfer freight from road to rail, both for efficiency reasons as well as to meet the carbon reduction targets. And we believe that Cargo Unit will play a central role in delivering these objectives for the region, and also will be a significant beneficiary for this drive. We followed up that initial acquisition in December with an investment in Greenergy, which is a data center currently being constructed just outside of Tallinn. Now, I'm not going to talk too much about this investment because you have the CEO of Greenergy speaking in a moment, and Ular will be able to speak much more eloquently than me about the potential of the project. However, we'll be completing the construction of the facility in the coming months, invest in the platform so that we're able to convert the strong sales pipeline, and then our intention is for the fund to support the management to expand the Greenergy platform across the region. And that's a theme that you'll see throughout each of our investments. We're less interested in single assets, but rather investing through strong management teams who've demonstrated their expertise and track record. We want to invest through them to expand across the region. So we've made some exciting investments in the transport and digital sectors. And I'm afraid, just as was the case in October when we had signed Cargo Unit, but we were unable to publicly speak about it until actual close, So the same thing has happened again in the energy sector. I can say that we have signed an agreement with a significant renewables platform, which has existing assets in a number of countries across the region, but more importantly, has an extremely strong management team and an impressive pipeline of opportunities that we expect to convert over the next 2 to 3 years, furthering the drive into sustainable energy production and, of course, enhancing energy security. I'd invite everyone to keep an eye out on our website and press in the coming days when we will disclose this investment. So in the short time I've had, I've only been able to provide a small flavour of what we're about. But there are contact details on this slide. And of course, we're able to be contacted through either the 3Cs website or Amber's own website, should you wish for any more information. Thank you very much for your time today. And I look forward to listening to the rest of the conference. Thank you.